Matthew Dell here with InsurancePrescription.com, and today I wanted to talk to you about the differences and similarities between fraternal and commercial insurance companies. So people are usually well familiar with commercial companies. These include places like AIG, AXA, Banner Life, Bright House, which used to be MetLife, Lincoln, Mass Mutual, Midland National, Mutual of Omaha, Nationwide, Northwestern Mutual, New York Life, Penn Mutual, Primerica, Prudential, Protective, Securian, and the list goes on and on. Fraternals are maybe a little bit less well known, but there are no fewer of them. There's really a bunch of them. Many of them are very small, but some of the most notable include the Baptist Life Association, Everence Financial, the Foresters, the Knights of Columbus, Modern Woodmen, Thrivent, Woodman Life, and many, many others. Now, one definition of fraternal insurance companies are those companies that satisfy the requirements in U.S. Code in Section 501, subsection C, and in particular, subsection C8. So 501C is that subsection of the code that deals with tax-exempt organizations, and in particular, subsection C8 deals with Fraternal-Benefit Societies and associations. So if an organization satisfies the requirements of 501c8, then it's a fraternal. On the other hand, commercial organizations are for the most part organized for profit purposes. There are structural differences. So for example, commercial companies are organized generally as stock companies. They might also be organized as mutual fund companies, but fraternals are going to be incorporated, but they're not going to be organized with capital stock. So they're not capitalized with stock. Whether common stock or preferred stock. Now that means that commercial companies are generally run by their stockholders, at least when they're stock companies, whereas fraternals are going to be run by their membership. So they're not controlled by shareholders. They have a representational form of government where the members, in theory, have equal voice. In practice, they're going to have representatives, as we just said, but in general, the main difference there. So this points to perhaps the largest difference, I think, between fraternal and commercial companies, and that is that fraternal companies are going to require membership in whatever society or association is the main fraternal tie. So, in just a word on that word fraternal. So in 2019, as I record this, of course, many fraternals are equally sororal as well as fraternal. In other words, men and women can have equal membership. This is not always the case, but many of these organizations are like this. So the word fraternal is something of a relic in some cases, but fraternal groups may be predicated on nationality or on religious affiliation. They might be predicated on some kind of a labor tie, for example, a particular industry. But again, they're controlled by membership, fraternal organizations. So commercial companies are structured differently. They're oriented towards a different purpose, that is to say, towards profit. And another difference is going to be the kinds of contracts that they write. So fraternal contracts are basically what are known as open contracts, whereas commercial contracts are closed. Now, I get into this in more depth in another video. I'm not going to get into it too deeply here, except to just say that the real difference is in a clause in the contract that's usually referred to as the entirety clause. And so for a commercial company, the entirety of the contract, the policy that's written, essentially is all the contract clauses together with the insurance application. Now, in a fraternal contract, that is the case as well. You have the clauses of the contract, you have the application for insurance, but in a fraternal society, generally speaking, the entirety clause will also make reference to the bylaws, to the charter, to the constitution of the fraternal group. So whatever the controlling or founding document of that society or association is, that usually also is a part of the contract. Now the difference here is that any amendments that are made to the bylaws, to the charter, to the constitution, then also apply to all the other contracts that are in force. Whereas in a commercial contract, because the entirety of the contract is made up of the clauses of that contract and the application, only time you can change it is if a future amendment is signed by both parties. Now, I'm going to abstract away from certain things. There can be many different parties and people who are involved in a life insurance transaction. But for the most part, if you want to get down to the simplest thing, you're going to have the insurer and the insured. So the insurance company and somebody who is insured. And that's the simplest kind of contract. And so for a commercial company, those two parties, would have to, in the future, agree to some amendment mutually and both sign it in order for it to be effective in changing any of the contract provisions. Whereas with a fraternal contract, again, amendments that are decided on by the fraternal society or association can also have an impact on contracts already in place. Now, there's also a difference in terms of the kinds of people who are engaged in selling fraternal insurance versus commercial insurance. So at its most basic level, there's a difference between an agent and a broker, and some definitions are going to kind of put it like this. An agent represents a company and a broker represents a client. Now, in terms of agents, you're going to have two different kinds mainly. You're going to have a captive agent and an independent agent. So a captive agent is going to be an agent that works for one particular company and represents that company's products and services to its membership or to clientele only. Then you're going to have an independent agent, who is capable basically of bringing a variety of different companies' contracts to the attention of a prospective insurance buyer. Now, if you remember, fraternals require membership. So essentially, you have to become a member of that society or association before you can avail yourself of a fraternal insurance company's insurance policies. And that is going to imply that the people who are going to represent fraternals are going to generally be members of those societies, and those fraternal companies are generally going to be represented by captive agents. So there's a corollary here, and that is that commercial brokers and agents will not have access to the kinds of products that are offered by fraternal companies. So for instance, you won't have an insurance broker or you won't have an independent agent bringing the Woodman life policy to your attention. If you're comparing different companies, you're not going to be able to say, well, what does Thrivent have on this? Unless you are a member of the fraternal organization, you will not be able to have access to the products and services that they have. Now, I should say that not every commercial company does have independent agents or brokers that have access to their products. Some insurance companies that are commercial also have captive agents. Sometimes the independent agents have access to their products and other times they don't. But for example, some companies that employ captive agents would be Allstate, American Family, Farmers, State Farm, Primerica, Northwestern Mutual, and New York Life. We've spent some time discussing the differences between fraternals and commercials, but it's worth pointing out that there are numerous similarities as well. So in the first place, the concept of insurance that is prevailing in both worlds is the same. There is no real difference. The idea behind life insurance and insurance in general is that there is a transference of risk from one person or entity to another. So usually in the case of life insurance, it's going to be from an individual to a group, to a collective, to a company. The practice of life insurance is going to be the same as well. So if you move risk from one person to a group, you're essentially moving it from one person's financial resources onto some group that has a greater number of financial resources, and that can absorb a loss more readily than an individual can. But both fraternal and commercial insurance companies essentially base their life insurance on the idea of a legal reserve. So the legal reserve is, in general, the amount of money. You can think of it as the amount of money that is required by law for the insurance company to have on hand in order to satisfy various requests for cash surrenders and various claims for death benefits for the insurance policies that it has. Now, how much? Well, we don't have a crystal ball, and so everything basically is based upon probabilities. For more detail on this, see the video that I have on open and closed contracts for a greater discussion, but for the time being, let's say the following. In banking, you have, this is an analogy with banking, so you have in the U.S. a banking system that's generally referred to as fractional reserve banking. Now that means that the banks have on hand a fraction of the amount of money that they have deposited with them. So your local bank does not have on hand in its vaults a sum total of all the deposits that represent the deposits with that bank. So if everybody came in asking for their money, the bank wouldn't have it. They're required to have on hand a fraction or a portion of the amount of deposits that they have on hand. And in general, this is going to be a probability judgment based on the best guess as to how many people are going to come in and ask for withdrawals, how many people are going to close accounts, and it's based on judgments about what they think that approximate number of people is going to be. In a similar way, a life insurance company is going to have a legal reserve that is based on the company's guess regarding how many people in a given year are going to request cash value surrenders, or a number of people in a year who are going to file death claims and get death proceeds paid out. Now, another similarity between fraternal and commercial insurance companies is the basis for the calculation of this legal reserve. So there's really a couple of factors that come into play here. The first one is going to be mortality tables. So there is a mortality table called the Commissioner's Standard Ordinary Table, or the CSO table. And this is going to be the same table used by commercial and by fraternal companies. And the idea here is that that table is an actuarial table that describes the probability in any given year that a certain age group, a certain health group is going to die in that year. So it's basically a table that gives statistics and probabilities for deaths in a group. And this is based on something called the law of large numbers. So the more people you have, the more likely you're going to be able to predict a particular outcome for a group of people. Now, the legal reserves are not just stuffed into mattresses or put into tin cans inside of the insurance company's halls. So they're going to have their money invested in certain vehicles. Now, law requires that insurance companies invest in relatively conservative vehicles, so they can't invest in risky things. And so part of the legal reserve calculation is going to be based on an assumption of a certain rate of return or a certain interest rate that companies are going to get on the cash that they have invested. They have to have a sound interest rate assumption. And remember, only certain investments are permissible. So the insurance companies cannot be speculating on risky ventures. They can't have their money invested in penny stocks. They can't buy junk bonds, for example. And that's a similarity, again, between fraternals and commercials. Another similarity is going to be the products that are available. So commercial and fraternal insurance companies alike are going to have the same mixtures of products. They're going to carry term. It could be a renewable term, decreasing term, increasing, level term, convertible term, return of premium term, and so on. They'll have whole life products, whether they're limited pay or single premium or traditional whole life products that you pay on for the whole of your life. They're going to have universal life available, other kinds of adjustable life policies. They might have variable contracts. Now, variable contracts are going to be ones that are implicated or tied in with the stock market, generally investments that are capable of going up with the market or going down with the market. Now, there may be different, and there are different licensing requirements when agents are selling variable products than agents who only sell non-variable products. But the point is this isn't a difference between fraternal and commercial companies. This would be a difference in terms of what agents have in terms of licenses. They might also sell annuities. Those annuities could be fixed, equity indexed, variable, and again, the same kinds of caveats apply with respect to licensing. But in principle, fraternals and commercials both have access to basically the same spectrum of products. Additionally, whether the agent is fraternal or commercial, they're all going to base their recommendations, or at least they ought to, on the same kinds of pieces of data. So they're going to ask you things about your financial records, they're going to ask you about other insurance you carry, group term maybe, about your assets, about your income, about your plans for retirement, about your funeral plans and the like of this. And they're going to take all of that information and use that ideally to make a recommendation. And again, that kind of thing is going to be the case whether it's in the fraternal world or in the commercial world. Both fraternals and commercials are going to obey the same laws. Again, they have the same legal reserves, they use the same mortality tables, they have the same legal clauses in the contracts. Now, the clauses might read slightly differently, as we just said with the entirety clause, but they're going to have the same clauses in their contracts. They're going to submit to the same federal and state regulations. In various states, you're going to have an insurance commissioner, and that person is going to range over and have authority over insurance companies of all kinds, whether fraternal or commercial. So at the end of the day, there are differences between fraternal and insurance companies, primarily the difference of membership. Again, you have to be a member of the society or association that constitutes the fraternal to have access to those products. But there are a huge number of similarities as well, and the real differences are not in terms of the mechanics of insurance and how insurance works. It's mostly in terms of these other benefits and these other membership incentives. You can consider an example with USAA. So USAA is a company basically that deals with members of the military, whether past or current members of the military. And you have to have some military tie in order to open a USAA account or carry USAA insurance. But once you have the requisite tie, then you're able to avail yourself of the products and services that they carry. In some cases, fraternals may have better pricing or more incentives, more membership benefits. In other cases, commercials might have a slight advantage. The thing you would want to do is sit down and explore the options that you have available to you. What membership ties might you have? What groups might you have in your area? You want to price shop, you want to talk to different agents or brokers and get a feel for what might be best for you in your situation. If you found something of value in this video, please like it, subscribe to the channel, check back for future content. Again, I have another video where I go more in depth into the difference in the two contract types. I've got all kinds of videos on different kinds of life insurance products, uses for retirement, for legacy planning, for final expenses. We've got videos on different kinds of retirement plans, from the IRA and the Roth to the 401k. And I appreciate your time today. Thank you so much, and I hope to see you in another video.